What's going on YouTube? It's Gain Mo.
With the recent start of undergraduate or graduate classes, student loan finance is becoming a huge conversational piece. And we want to help you understand student loan finance in this video. So without any further ado, let's get started.
Undergraduate and graduate financial aid disbursements typically take between 10 to 30 days after school starts to actually disperse into your account. Now, many of you might be receiving emails that your tuition is due, and you might be fearful. But don't worry, we're here today to give you the inside scoop about your financial aid and your federal student loans. As you're getting ready to start your on-campus or online classes, many of you guys might be wondering how you're going to be able to afford that tuition. And you're going to be wondering how financial aid actually works, and when you're supposed to start receiving that award money into your account.
Now, the exact date of a student's financial aid disbursement varies based on the college or university he or she attends. And the colleges or universities typically set the disbursement date, which is usually about 10 days prior to the start of the term. The disbursement date can also depend on the type of aid awarded. For example, a student that relies on federal student loans to pay for his or her college or university may not see those loans dispersed into their account until 30 days after the start of the term, if he or she is a first-time student at that specific college or university.
Both federal and institutional financial aid typically come in the form of a credit to the student's account. However, outside financial aid, typically in the form of a scholarship from a private company, differ from organization to organization and might come in the form of a check mailed to the student directly or a credit on their student account. Now, those disbursements into the student account could sometimes lead to a credit on their account, which at that point, the college would have to issue a refund to the student.
Why might financial aid be delayed? Well, financial aid could be delayed for a number of reasons, but one of the most common reasons why one's financial aid might be delayed is because family members and or students did not fill out the correct documentation to prove eligibility for federal student loans. It is imperative that you fill out all the correct documents needed by that college or university and the government in order to receive federal student loans for your education.
Now, according to Sally Mae's How America Pays for College 2020 report, 16% of families did not file for their FAFSA for the academic year of 2019 to 2020 is because they missed the deadline. Now, some of the reasons for the delay in your disbursement could include failure in one of many steps. Failure to sign your student loan promissory note, failure to participate in your student loan entrance counseling program, or failure to provide verification of some additional documentation. Now, keep in mind, the summer of the academic year 2020 to 2021, the financial aid offices have been flooding with appeals for additional assistance due to COVID-19 and its economic impact. Student loan advisors and their aides have been expressing to parents that they're more behind than usual, and for parents and the students to start taking arrangements early on to provide those administrators with a grace period to avoid any future delays.
On top of all the concerns that come with federal student loans in terms of disbursement, federal student loan vocabulary may seem convoluted and overwhelming in times. Well, it doesn't have to be. Federal student loan policies are ever changing, so let's break down some of the key terms that you may come across in regards to student loan aid. FAFSA, the free application for federal student aid, is a government form that students and or their parents must fill out to prove eligibility for government provided benefits.
When taking out loans, there are two primary elements: the principal and the interest. Now, the principal is the amount that you borrow and will have to pay back. Now, the interest is what that lender is charging you for that loan, and is typically calculated as a percentage of that principal. Now, the interest on your federal student loans is set by Congress itself through different legislations. However, the interest on your private student loans is set by the lender themselves and could be affected by a variety of things. Now, some of the factors that might contribute to the interest rate you're receiving on those private student loans could include your credit score, whether you have a cosigner, what type of loan you're applying for, and the duration of that loan. Now, the lower the interest rate that you do receive, typically that means the lower interest you're going to have to pay over the lifeline of that loan.
Now, federal student loans are government-funded loans that provide a number of consumer flexibility and benefits, which usually make them the go-to for most student loan borrowers. On top of that, they offer a greater repayment schedule in comparison to private loans. Now, federal student loans are typically categorized into two categories: subsidized or unsubsidized loans. Subsidized loans are limited to students who demonstrate financial need. If you qualify for these loans, the government will pay the interest of the loan while you're in school and 6 months after you graduate school. Consider this a grace period. Alongside that, they will pay the interest of the loan while in deferment. Unsubsidized loans, on the other hand, are more widely available, but do not offer the same benefit that subsidized loans have. Although you don't have to pay for your unsubsidized loans until after you graduate, the interest does accrue while you attend school and is added to the principal for you to repay later on.
American Student Loans is a student loan program offered to students with exceptional financial needs. Now, the school acts as the lender, the funds are limited, and not all schools offer them. Now, the interest rate is fixed at 5% annually. Now, Federal Plus loans are available to graduate students as well as the parents of undergraduate dependent students. Now, the Department of Education acts as the lender, and these loans are dependent on your credit history and your eligibility for future financial aid. Now, private student loans are offered by private lenders such as banks or schools. Now, these private loans do not have as many financial benefits and protection as federal student loans. Now, with private student loans, you might have to apply with a cosigner, and the interest rate you get is very dependent on your credit worthiness. Now, when it comes time to repay those loans, you don't have as many options as you do with your federal student loans to decrease your payments or to delay your payments. Now, we hope this video provided you with some clarity regarding the format of your federal student loans, and we hope that your student loan process becomes simpler than ever before, as it's ever changing. Now, as you dive deeper into your healthcare career and your healthcare education, it's important that you understand the fundamentals of your student loans.
And as always, don't forget to gingerly tap that like button, subscribe to our channel for updates of new information and videos concerning your student loans, and we'll see you next time.